Hey everyone, Atia, the Savvy Accountant here. And today in this series, we're talking about business entity structures. And I'm going to talk about business entity structures and how it impacts your self-employment tax, what the self-employment tax is, and basically how you manage payroll. So when it comes to self-employment tax, your entity structure does impact that. If I figure out how to put like a little image here, I'll put a little image showing you which entities pay self-employment tax versus which don't. But if you remember from day one of this series, we said your sole proprietor is going to pay self-employment tax. Your single member LLC is going to pay self-employment tax. And if you have a partnership, like a multi-member LLC, that's going to be a partnership because you have more than one member, then that's going to pay self-employment tax. Your S-Corp doesn't pay self-employment tax because your S-Corp is going to be paying you as the owner. They're going to be paying you a reasonable compensation, so you're going to get salary. So we'll talk a little bit about how you manage your payroll in my third topic, but we're here to talk about self-employment tax and what that looks like. And so if you remember, my day one talked about the IRS imposes multiple taxes. Self-employment tax is not your income tax. So if you are looking at your tax return, it's actually a separate line of additional taxes that you pay. It's going to equal to about 15.3%. And that amount represents your Social Security, Medicare, those percentages that come out of your paycheck when you're paid at a regular job. Those percentages total to 15.3%. And that's what self-employment tax is going to be about. Around that 15.3%, that's going to be taxed on the earnings that you make in this from this self-employed income. Those are going to be the taxes that you pay. So we talked about sole proprietor, single member LLC, that you guys, essentially it's treated the same way for tax purposes. So on your Schedule C, you're going to be reporting the income, the expenses for the business. And then when that Schedule C gets attached to your 1040, once it calculates your taxes, it's going to have a line that says additional taxes, and it's coming from self-employment. So the second thing I want to talk about is how the different tax entities are going to figure into what you actually have to pay. And so when it comes to your sole proprietor, your single member LLC, we talked about that self-employment tax because you cannot pay yourself a salary. So the reason that you have self-employment tax imposed is because you don't pay yourself salary. So when you are a sole proprietor, a single member LLC, you actually cannot take payroll for yourself from the company to reduce the taxes that you're going to have to pay. So what that looks like is on your profit and loss, you have your revenues, then you have your expenses. When you hire other people, so you can have payroll, just not for yourself. So when you hire other people, that's going to be a deduction for the business. And so that's going to be, Section 1 is revenues, Section 2 is expenses. The payroll that you pay for your employees, that's going to be in Section 2. But you personally that owns the business are not able to take salary from your business in order to reduce your income, because you are going to be taxed on that entire net amount that you are going to bring in from that company, from that business. And so that's the key difference when it comes to your sole proprietor, single member LLC versus your S-Corp or your corporation. So your S-Corp, when you are paying yourself a reasonable compensation, that is going to be reported in that Section 2 of your profit and loss. So your salary is going to be a deduction for the business. It's going to reduce the earnings that business generates, and that is going to reduce what gets passed through to you from your K-1. So that's a key difference that you need to understand, that under a sole proprietor, single member LLC, you actually cannot be on payroll. Whereas with an S-Corp, you are required to put yourself on payroll, and you are required to take a reasonable compensation. I get a question a lot, how do you manage payroll like when you're an S-Corp? You are going to manage it the same way you would manage hiring anybody else as an employee. My suggestion would be to use a payroll software or payroll provider. That could be a CPA firm, that could be Gusto, ADP, all that stuff. Those are going to be who you use. Even if you were the only employee, you are going to be putting yourself on payroll. So you want to make sure that you are using a system that's going to take the correct payroll taxes out. So you're going to have your Social Security, Medicare coming out. Depending on the state that you're in, you're going to have your withholdings for your federal as well as your state. You want to make sure that it's happening automatically in the right way so that it minimizes you making any mistakes having to file it yourself. So I hope you guys learned something about payroll, self-employment tax, and kind of how they're similar and how self-employment tax imposes that 15.3% because you're not on payroll and you're not paying into that Social Security, Medicare bucket. And so that's kind of, it replaces that. So if you guys have questions, let me know in the comments. Bye.